Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about mistakes, misconceptions, and how to broaden, your horizon on your outlook on investing. And so we'll talk about that today, and there's going to be a reason why we're talking about that today. But if you're new to the channel, welcome. This is where we put $100 into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new to the channel, welcome back. And so we'll just give you guys a quick update on the portfolio. And so my $100 didn't go into the account because it takes 3 business days to do that. And so Wednesday was actually Remembrance Day in Canada, and so it doesn't count as a business day. So we only had 2 business days, so Tuesday, Thursday, and Friday. So it'll probably go in there on Monday. But we'll give you an update on the portfolio. So the portfolio itself sits at $1,229.66. That is up $4.32 as of market close yesterday, up 0.35%. For the week, we were up $44.87, up 3.79%. For the month, we were up $95.04, up 8.38%. And we are up $109.66 for the 3 months, up 9.79%, and that is the all as well. And so, yeah, and we're just going to talk about, a few things here. So first thing when you're starting out investing is making sure that you have your emergency fund in place. Usually it's $1,000 or 3 to 6 months worth of living expense in case you lose your job or anything like that before maybe even consider investing. And that's just in case, because investing is still a risk. I don't care what anyone says. Even if it's just dividend investing, it is still a risk. So make sure you have that in place. So that's the first thing. Don't ever put your life savings into a stock market. And yeah, so that's literally the first thing. Second thing is definitely do not try to time the market. That is a horrible idea, in my opinion, and I believe it's a horrible idea for anybody, because you'll never ever know when the market is going to hit bottom, ever. Like, even if you bought, let's say, a stock at $15 and the next day it dropped to $14.50, like, are you really upset that, like, why are you upset that you bought it at 50 cents more? Like, it's not that big a deal. If you're pinching pennies, I don't think you're going to survive in the stock market, because no one knows the bottom of the market till the bottom of the market happened, not happens, but happened already. They say hindsight is 20/20, and it's true. You're never going to know when the market bottom is, and that's why you want to consistently invest over time, consistently with a certain amount, because that way you can dollar cost average, and I talked about that in another video. And so don't ever try to time the market, because you never know. Because honestly, even if you time the market perfectly, or if you bought it at a bit more expensive after the bottom of the market and it shot up, I don't think you would care that you bought it at $15 instead of $14.50 if it went to $30, right? I don't think it would matter, to be honest. And I think we'll do a good example here. Let's go 5. No. Okay. So, like, let's say Bank of Montreal, on March 17th. So that literally was the bottom of the market. It was a stock at $60. And let's say you bought it at $67.51, right? I don't think you would be pissed, about it going to $87.54, when you bought it at $71 or $67, right? Like, yes, sure, you could have bought it at 60, but honestly, who cares? Because today it's worth $87.54. Like, I don't think you would actually care about buying it at $67 instead of 60. Like, you can't time the market. It's just not possible. If you can, I don't know if you have a crystal ball or how you do it. And if you've had luck doing that, that's like trying to strike the lottery ticket numbers in the Lotto Max. It's not going to happen, in my opinion. I mean, some people can do it, but I don't think it's a common thing that happens, because if everyone could do it, then we'd all be freaking millionaires. And so do not try to time the market. and that literally prevents you from investing in the first place, because you're always trying to wait for this magic number, this strike price of, I'm gonna buy at 61.71, and that I'm not gonna buy at 61.72. You will never ever invest if you have a mindset like that. The best way to look at it is, okay, here is my, you have to gauge it by, is this stock overpriced, fairly priced, or underpriced? That is the only way. Do not set a number to it, because you will never ever invest. And a perfect example is Tesla. To be honest, I bought Tesla stock before the split and a bit after the split, and that was an all-time high. And so I'm currently at a loss with Tesla, just so you know, in my main portfolio. And I told myself, I will buy to dollar cost average. I will buy below 400, like 300. Guess what? That day came and I didn't do it. And so the recent purchase I made was at $404.26, $404.26. I purchased a few shares to bring my dollar cost down, because I think my original investment was like $460 or something, $460 per share. And so I brought it down by buying at a lower cost. Didn't care that it wasn't below 400. All I knew was it was below my current cost basis price, and I'm okay with that. I'm more at peace of doing that than trying to be like, I'm gonna wait till $380.26 to purchase. That is just silly, just absolutely silly. So don't try to price target everything. Literally, do a range. For me, like, I told myself that I was going to purchase a certain stock, and I'll probably talk about it in this video, anywhere from $35 to $40. That is my price target. If it hits 40, sure. Am I going to buy it right away? No, probably not. Am I going to take the chance of it dipping below 40? Yeah, probably. But I'm not going to be like, only at 35 will I buy this stock. Only at, I'm not going to do that. It's silly. And so don't do that. Because now you're chasing, you're trying to chase down like the bottom of the stock price. Like, that's just not fun. That's like chasing hype, chasing hype in a stock. You're going to eventually get burned because it's the hot stock, right? Don't do that. That's going to burn you, right? Give yourself a range and go ahead and do it, and don't regrets, no regrets, because the market is the market. You're not going to know. And so that is the other one. The next thing I want to talk about is make sure you do your research and you understand, and don't be so narrow minded. And what I'm talking about is yesterday trending where was the EV market. It's funny that we're talking about Tesla. But here's how I would think you should do research is don't watch so much news and listen to the news. It's going to hurt you. It's going to burn you, because it's bias. News can be biased. People can be biased. I can be biased. Even watching YouTube channels can be biased. Following a certain investor on Twitter or whatever it is is still biased. But make sure you do your research and make a decision on your own. Do your own due diligence and make sure that you own that decision. For example, a lot of people yesterday, what was trending was NIO, the EV company in China, XPeng, EV electric vehicle company in China, Li, I think it's Li, electric vehicle company in China. Tesla was obviously trending as well. But let's talk about that, okay? Because a lot of investors get freaked out about things that happen in policies and world policies and things like that. But I honestly, because it's not just this is a dividend channel, but I don't just invest in dividends, just so you know. And this, I had this conversation yesterday, and it was a great conversation with a few people. Like NIO yesterday was trending. It's had massive gains. It's like the Chinese Tesla. And I'm going to talk about, I guess, the adoption rate in China and what it's like. I'm not Chinese, but a lot of people base their research off of what is on the news, what other people say, and things like that. This is how I do research. Is I I looked at it. I almost bought Xpeng on Xpeng Motor, I think Motor Company, on Thursday, and I was looking at it and I was like, because I think they released their Q3 financials and they looked great, and it shot up like I think not 300, like 35%. This is a Chinese company, and as you know, there's a lot of conflict happening between this side of the world and that side of the world, and it's rough. Okay, but here's the thing: a lot of people pulled out their investment because some investor made a tweet, made a tweet, and it was a catalyst for a massive sell-off for the company, and so they lost like 14-15%. Now you're not going to find it on Wealthsimple Trade. You have to go through traditional trading platforms. But here's what I know: in China, that I think a lot of people are literally sleeping on these companies on this side of the world. So you look at, and I'm going to give you an example. You look at Google, okay? Google is not in China. China has its own Google called Baidu. I don't think you can buy Baidu stock, but I'm sure the amount of people there and the adoption rate that happens in China is very massive. So there's a lot of people that probably made a lot of money. Amazon is a massive tech company here. We know Amazon, but do you know Alibaba? Because in China, there is no Amazon. They lost market share like nobody's business in China. And what happened? Alibaba took over and market share was done, right? If I could, you can invest in Alibaba too. I think it's the ticker symbol is BABA, BABA. What's another one? Facebook, massive company here. A lot of people like to invest in it here, but you slept on the one that is in China. I don't know what it is in China, but we slept on it, right? There was money to be made there. And the same thing is happening with Neo, with Xpeng, with Li, because we have like Workhorse or something in North America, and Tesla, right? And all of a sudden people are selling off because they listen to some investor. Like, let's take the horse blinders off and let's look at what China's like. Huawei is a perfect one as well. The market share in Huawei in China is massive. And you can talk to me about conspiracy theories and you can talk to me about all this stuff, but you need to look past that because you need to worry more about your investment than some sort of government policy and how they're doing things and security and things like that. Don't get caught up in that stuff. Like you have every right to have your opinion on that. You have every right to think what you want to think. This is a free country, right? But the adoption rate is massive. They actually favor electric vehicles more than you even think. They have special parking spots. The time for you to get a license plate for an electric vehicle in China is much faster than getting a license plate for a traditional gas vehicle. But the adoption rate is huge over there. It happens very, very quickly. So once they start pushing out electric vehicles, there is literally, I don't even know how many people are in China, but it's massive. And I think people sleep on it. They sell off because people think, it's a bad idea that the administration has shut down things that are tied to the Chinese military. There are things tied to the U.S. military, and they don't have a problem with that, do they? Right? Like, come on, right? As Biden was like, come on, which is a weird thing to say, but anyways, don't sleep on these companies. Make sure you do your research, because we have to look past not just the financials, not just what people are saying, but look at how do they operate over there, because they don't have an Amazon there, they don't have a Google over there, they don't have a Facebook over there. They have their own kind of system. And the funny thing is yes, there may be tension between them and North America, but they are really good, like super good at copying these companies and making them better, 100% better. And that's not me being, I love North America. Don't get me wrong. I'm not favoring them, but I think sometimes a lot of people sleep on these companies over there, and there's tons of money to be made. Like, one thing I can agree with that tweet of that company, I'm not going to talk about who it was or anything like that, but he's right. Take your profits, because you did make a lot of money off of Neo. You made a ton of money, and take your profits and go and be okay with that. And so, final mistake, don't freaking ride something out for so long. Be okay with taking some profits. Be okay with selling it off and being done with it. because it'll just add stress to your life if you try to keep it forever. There's certain stocks, yes, you want to keep forever, but certain stocks, just get rid of them. Less sometimes is more, right? Don't try to own 150 different companies in your portfolio. Like I said, less is more, and that's most of the time true. Less is more, because you don't have the time to worry about 150 different companies. You don't have that much focus. I sure don't. So make sure you just don't do that. So this video is just kind of a tangent, and I don't know how it's going to be, and maybe this is a mistake putting this video out, but that's where you learn. You never lose. You never take an L in anything you do. It's just, the L stands for learning, and we're continuing learning. If you're not learning, you might as well just stop, right? And so I'm taking a risk putting this video out, because I had nothing to talk about. I couldn't update the portfolio because my $100 didn't go in for this week, and I'm willing to take that risk and see how this video goes, because it is perspective. And again, it's all my opinion. I'm not a financial advisor. I'm definitely not your financial advisor. And so please do your research, and please continue to learn. Don't take advice from a blog or some news outlet or even a guy on YouTube. It just doesn't make sense. Like, yes, you probably can, and that's your decision. And sure, you might make some money, absolutely. But get your own perspective, make your own decision, and own that decision. And so that is pretty much it for the video. Hopefully this literally was not, it's kind of all over the place, but you got to test things out, right? So hopefully you guys did enjoy the video. Leave a like, comment, and please don't listen to the bots down there that are, this guy changed my life. Email this guy. That's annoying as heck. So please, I'm asking you to refrain from emailing that person that says, oh, email this person, they changed my life, and there's like 21 replies on the comment. Like, come on, get real. And so hopefully you guys did enjoy the video. Leave a like, subscribe, and we'll definitely see you in the next one. We'll probably have 3 videos next week, because the $100 will go in there, and I'm going to increase the position and got to keep you guys updated. And so thank you for the support. We're over 100 subscribers. I love you. The channel's growing. Please share this video with all those that you know, because we like to grow. And we'll see you in the next one. Have a great weekend, guys. Bye.